Hey everybody, good afternoon. It's Mike. It's February 4th already, and it's 4 o'clock in the afternoon sorry, February 4th at 4 p.m. I just want to thank everybody for taking the time to come out today to catch this quick presentation on the Orderflows Algo. This is a tool that we released back in November, and I've been getting a lot of positive feedback from it. Um, Trader's been wanting me to do another presentation on it, and actually, for the users of the software, we got a special training coming out I think it's going to be Friday of this coming week. So, for those of you that don't yet have it and have been interested in it, I want to sort of go over what it is and how to use it, because it's the Orderflows Algo, right? It's a tool that it took us some time to develop because I needed a tool that would help traders understand supply and demand. We always talk about supply and demand and how to use it with order flow. And it's not as simple as you would hope, right? We all use the term supply and demand. We also use the terms support and resistance. Sometimes people use them interchangeably, supply and demand and support and resistance, when it's really two different things. And when we created the order flows algo, we designed it to run on normal candlestick charts. It can run on a footprint chart, but in all honesty, you don't need to run it on a footprint chart because it takes all that analysis that you would have to do on a footprint chart and basically puts it on the normal candlestick chart for you. So it just, makes your life a bit simpler in that respect, okay? And to be honest, if you're depending on the type of footprint chart that you are using, nowadays there's a lot of extra analysis that goes on with footprints, right? With value areas, stacked imbalances, zones being drawn out. And again, if you're using a footprint chart and you're drawing out things like stacked imbalances, then you got supply and demand zones being drawn out. It can be kind of confusing because it's going to get messy. You're going to have a lot of zones overlapping each other, and I'm not going to say you're going to get tuned out of them, but sometimes you have a lot of zones going on that are overlapping, and you're just like, what's the point of having them, right? And keeping it on a simple bar chart, in my opinion, just makes life so much easier for the trader. It's much easier to identify things that are happening in supply and demand on a normal bar chart. Okay, that's just my own 2 cents on that, but we'll discuss it. We'll take a look at charts shortly and go from there. So when traders try to define supply and demand, it often comes very late in the sense that they're simply looking at a chart and determining it afterwards, right? And there's the saying, hindsight is 20/20, and it's no more truer in trading than in anything else. I mean, I see a lot of people posting charts up and they're just marking them up afterwards. Oh yeah, it's clear there was supply and demand here, or there was a resistance zone here, or this or that after the fact. And the other thing that you're going to run into is identifying supply and demand consistently and technically, not subjectively. Because sometimes you ask traders, right? You get a room of 10 traders and you give them the same chart, determine supply and demand on this chart. Okay, well, the most obvious ones are going to draw the high and the low. But the in between areas, it's going to be different between the 10 traders. Okay, so once you need to be able to subjectively draw it over and over and over, right, based off of a set of rules. And again, the order flows algo is based on supply and demand, but mixed in with order flow. That's not going to change, right? It's fixed. That's the one nice thing about having to program the way you look at the market. When you have to put it into a program, right? You have to program it. It's binary, right? Zeros and ones, and you can't take that subjectivity that you would have just by looking at a chart. And today, you consider this a supply and demand zone, and then tomorrow, you wouldn't, right? I mean, that's not how you should be approaching the market, right? You have to have a objective way, not subjective way of identifying supply and demand. Okay, but then once you do identify it, what's the next step? Well, you need to confirm it, right? That, yeah, this is supply and demand, okay? And again, you could have something that looks like supply and demand, supply zone being formed or demand zone being formed, and then it fails, okay? Then people just erase it off the chart like it never existed. Well, it did exist initially on the way you were looking at the chart. It just market conditions changed. There wasn't that confirmation, so to speak, that, hey, you know what, this was a supply or demand zone, okay? And sort of the third part is, once it's confirmed, right, you need signals once the supply and demand zone is confirmed. And, just really quick, to show you how it looks on a chart, right? If you're looking at a normal chart, so this is, I don't know what this is, E-minis from Friday, right, the 2nd. It's non-farm payroll day, market had a nice rally. And then people are going to draw out supply and demand zones. Oh yeah, this was the low. Obviously there's a demand zone here. There was a supply zone up here. Okay, the most obvious ones. But there's a lot of trading going on between the high and the low of the day. Because you know what? At one point, this wasn't the high of the day, right? This was the high of the day. Okay, and at one point, this was the high of the day. But that doesn't mean that there's no other supply and demand zones coming in during the trading day, right? Supply and demand is what moves the markets in a basic sense. I always say, order flow moves the markets. Well, yeah, what's order flow? What is order flow? Well, order flow is the supply and demand that traders have that's coming into the markets, okay? It's just reflected in the volume that's trading. So, don't think that for a second that supply and demand's got nothing to do with order flow. It's highly related to order flow, right? Because how the orders are flowing in and being traded in the market is a direct result of supply and demand. How much demand there is at a level, right? Or how much supply there is at a level, right? Demand, if you're looking for the market to go up, you need demand in the market, right? And with order flow, we often talk about the aggressiveness of traders, right? The aggressive buying, the aggressive selling, people lifting the offers or hitting the bids, people selling at the market or buying at the market. But, if you understand order flow, it's not just aggressive trading that's taking place in the market. You also have passive trading, passive buyers coming into the market, people bidding up the market, or people offering it down, not necessarily lifting the offers to take it up higher. They're providing support in the market by not only buying the offers, but working strong bids that are supporting the market. Just as if a market is dropping, right, they're going to be offering out supply. They're going to be not just selling the bid to help move the market down. That's what's going to move the market down, but what's going to keep it from going back up. What's going to keep it from going back up is that supply in the market, right? That's the inventory that's there of available contracts, or people that have it in their trading book, so to speak, right? The prop traders that are holding S&Ps or holding bonds, that's their inventory. And then again, think about it in everyday sense, right? If you've ever run a business, whether it's selling stuff on eBay or Amazon or Etsy, or having a physical store, right? Like you're selling stuff, you have inventory. The inventory is your supply. Your customers provide the demand, right? They're going to buy your supply from you. And oftentimes the stores will run sales. They will lower their price, right? They're passive sellers looking to draw in the aggressive buyers, right? The whole concept of auction market theory is that relationship of supply and demand. How it's moving, it's constantly moving, right? If supply and demand was evenly met, the market wouldn't move, right? It would stay at one price. But we know the market's not like that, and especially the way the markets are now, they're constantly fluctuating, right? And it's because the supply and demand dynamics are changing. Right now, when you get into sort of the market, I don't know what we would call it, market mechanics, market fundamentals, the whole concept of supply and demand is a whole nother level, right? We can't tie it down to one thing, right? There's so many things that drive the market, right? You got macro traders, traders at hedge funds, right? Taking long-term views. You got real money buying and selling the individual stocks that are underlying in the S&P 500, or trading in the actual bonds, right? A bond trading desk, or actually trading currencies. It's all that stuff that makes up the supply and demand. Okay, but that's not what this is about. It's about, the thing is, all those people have to come to the market. They have to come to the futures market, the CME group, and trade that on the screen. So their transactions will show up on the screen, hence the order flow. Okay, so if you're looking at a chart, right, the easiest way is you're going to identify supply and demand is basically, oh yeah, there's demand down here at the low of the day, duh, right? There's supply up here at the high of the day, yeah, duh. But what about everywhere in between? You need a way to consistently identify it, because there are areas between the high and the low where there is demand, where there is supply in the market. Because if you're just going to say, oh, there was supply here, then, sorry, demand down here at the low, yeah, you'd be right. But does that mean there's no demand on the way up? Does that mean that there's no supply coming in at the way up to arrest these moves? There probably is, but you need to be able to identify it, and with a set of rules and consistently, okay? That's why we came up with the Orderflow Algo, to identify that on the chart, to draw out these zones. Now you'll notice there's sort of different intensities of these zones. Some are a little bit darker than others, and blue for bullish, red for bearish. You can see these lighter color zones like this one, this one, this one, the market had traded back into. For the darker ones, the market hasn't yet traded back into. Okay, so it hasn't been retested. So like, that's why they're light color blues, because it has been tested and failed. Okay, and again, supply and demand zones aren't absolute in the sense that the market is going to always stop and turn at them. Oftentimes they will, right? You can see down here at the low, up here at the high. Okay, and again, people will say, well, there was supply coming in here, right? Market dropped from 49.85, 20 points down to 49.65. Okay, you could always make that argument, but based off of the Orderflow Algo, it's not saying that there was supply here. They'll say there was some supply here, and then demand here, but then demand came in again here, demand came in here, demand came in here. Okay, but again, drawing them on the chart, honestly, one of the biggest problems I have with trading tools is oftentimes, or even traders that mark up their charts, right? They're looking at a chart like this. This is taken after the market had closed. Oh yeah, there was supply up here, demand down here. Maybe you had a demand in here or something. They're drawing it well after the fact. What you need to be doing, or have something that's doing for you, is drawing it as soon as it appears. Now, it's not going to appear oftentimes right on the bar on the low of the day, or the bar on the high of the day. I wish, right? But to be honest, you're not going to determine supply based off of, this is a 30-second chart. You're not going to base it off a 30-second bar. You can't, right? There's got to be more to it. That's why oftentimes you see these on the algo, right? It's drawing it out, right? And you see the market pulls back in here, but it's not confirmed yet, right? And I see tools out there, and I'll show you one later, where they draw out supply and demand zones, but oftentimes what they don't tell you, and I've seen them make videos on this after the fact, and it just irks me, is they'll say, oh yeah, there was these demand zone down here at the low, okay, but their zone often doesn't print until the market's well away from there, right? And well, what good is it if, yeah, there's demand here, but it's not telling you until it's 20 points away, right? What you need is a tool that's going to actually draw the arrows telling you, hey, there's demand coming in here, right? Or supply coming in, right? That's what the arrows signify, right? And again, honestly, I wish there was a easier way that would tell you, as soon as this bar prints right here, 932, buy it because that's a demand zone. But you're not going to get that off of the information in 30 seconds, right? This is a 30-second bar. Here it took a few minutes. It's coming in closer. And this is, again, one of the problems that, because I've tried honestly, I'm friends with a lot of the other vendors that sell tools and stuff. And, oftentimes they give me stuff to try out, for me to give them my feedback on things. And it's like, okay, you got a supply and demand tool, but it's not drawing in. It's being a little bit disingenuous in the sense that, yeah, I've got demand coming in, like here, you got demand zone being drawn, but by the time it signals, it's a little bit far away, right? Is it going to be more effective as opposed to one that sort of pulls back in there? Okay, so that's just some of the things. Again, this is a 30-second chart, but I'm going to show you later with using something like a 5-minute chart or even a 15-minute chart, how to zone it, how to get closer in, because when you're looking at supply and demand, obviously the sooner you can get in, the better, in my opinion. So we created the Orderflows Algo to address these issues, right? Identify supply and demand consistently and technically, not subjectively, where it can change based on who looks at the chart, or maybe how you look at the chart even. Sometimes you may look at a chart the first time and not notice something, and then later say, oh, yeah, that's so obvious it was there. Well, let the software do it for you. Then you need to confirm that supply and demand, right? Give you that clear signal of there is supply and demand here, okay? So again, the Orderflows algo is fundamentally based on supply and demand, but then we couple it with the order flow, okay? So again, it removes that step of having to look at a footprint chart, and by removing the need to look at the footprint chart, it removes the need to have a messy chart. I know it likes to have a messy chart. Now, order flow does not require tick replay. I'm sorry, the Orderflows algo does not require tick replay to run on a chart. It can run on a chart with tick replay though, if you like. But I know some people say, tick replay really slows down their system for whatever reason. So I know some people got older machines. We can't always upgrade as often as we'd like. Like even myself, I like to upgrade my PCs. But really, when I do that, I look for sales, right? Because prices prices always go up and down. Black Friday is always a good time. Companies have sales in the summer, Black Friday in July. Amazon always got Prime Days, etc. But you could run it with tick replay, but you don't necessarily need to use tick replay, because if you're using a normal, for example, if you're using a normal bar chart, right? You're not going to slow it down by using tick replay. Tick replay is something you would use with with a footprint chart. Okay, you don't really want to run a normal bar chart with tick replay. Okay, so that's sort of one of the benefits. That's something that, again, a lot of people have issues with. But I was going to skip over this part because this deals with if you actually have it, right? The license part. Because if you have the Orderflows algo, you do need a license for it. But well, let's take a look at it in action. Or we'll start with the settings first, okay? So people can understand sort of what goes into the Orderflows algo. Okay, so there's zones. There's supplementary zones as well as regular zones. Okay. Supplementary zones are extra supply and demand zones that are generally seen in trends as opposed to more traditional supply and demand zones being generated at swing highs and swing lows. I have it disabled by default, okay, because you don't necessarily need to see it on your charts, okay, but some people would like to see it, and I'll show you some charts in a second here. Let me just pull up the chart here real quick. Okay, so like this is MES, okay. Now there's all sorts of different settings that you can do rather than using the thing. I'll just show you through really quick right here. Okay, so let me just get my crosshairs go up here. I'm making it a little bit stronger to see. Crosshairs, I got it set at 2, but I'll set it at 3 so it's a little bit easier to see what I'm talking about. Okay, so we call it pullbacks, right? That's why some of these zones are dark red because these zones haven't been traded back into, right? This is a darker blue. This is also a darker blue. These are light blues. These light blue ones have been traded back into, okay? These dark red ones haven't been traded back into yet, right? This one got within a tick here. This one hasn't been traded back into, okay? That's why there's different colors, in case you were wondering. And supplementary, we call it supplementary pullbacks, deals with supplementary zones. Now, there's different types of strength, okay? And for most traders, we're gonna focus on normal trading. You could follow a minute-based chart or a longer-term chart, but normal trading is fine for most traders. And there's different strengths that you can use for your supply and demand. One is the base level, right? And that's what the default is. And again, you could go up to 30 or 50 if you wanted to. But in all honesty, the higher you go, obviously, the more strength it's going to be, the less signals you're going to see. If you just, 1 to 2, it's a minimal change, but obviously from 1 to 3, it's a little bit stronger change. So again, this is 3, right? It's set at 3 now. And you can see, okay, there's a few less signals coming in here, right? As opposed to 1. Right, there was there was more coming in here, but at 3, right, you don't have some coming in here. Now again, you can experiment on the market that you're trading, right? This is 2. The levels that I like, again, 1, 3, 5, 7. This is 5. Right? It's giving you the major here. It's giving you the major moves here, right from here all the way up to here. Then you get the bearish one. Okay, and again, maybe you want to see more of the trading day. This is it. This is set at 5. 7 is going to be slightly less signals. Okay, this is here set at 7. If you want to go, I don't know, 10 or if you can go to a very high number like 20, that's a strong one. Right now, you're just getting the major ones. Okay, and again, if you're using something like, say, longer time frame trading, strength you just keep at 1 because it's taking into account that it's a much longer time frame. You can see there's just the signal from way back here the day before where you had that big run up. So again, if you're like a swing trader or something, maybe you'd use that longer time frame trading. Okay. If you're going to use, like, say, I know some traders don't like to use time-based charts. They want to use a range-based chart or even a volume-based chart. But let's just go to, say, a 10 range. You'd have to work out the settings for that market. Okay, so like this is 7, on a 10 range chart. Obviously, during the evening sessions, it's going to be a little bit choppy, right? Like you see here, this is from the reopen at 5 until the morning 8. This is 9 o'clock here. This is on the reopen. Thursday evening into Friday morning, right? Then it had some nice moves. So again, it's depending on the chart, the type that you're using, it's flexible, right? Obviously, you will have to make some adjustments. This is the 1 minute chart here. Okay, it's a little bit cleaner than a range-based charts, but again, people use all sorts of different charts. People use time-based charts, use range-based charts. Everyone trades different markets, right? I mean, if you're looking at crude oil, whoops, a market like crude, CL, okay, this is with that setting that I was just using on E-minis set to 7. Maybe you don't want to have it so strong. Maybe you want to have it a little bit weaker. You set it at 5 or something. 1, the base setting, which is I believe the default setting, is going to be, you're going to get a lot of signals, okay, which maybe you don't want to see. It's just one of those things where it can be a bit overwhelming for some people, even though the general trend, right, you can see a lot of supply coming in here. You're sort of missing the little demand here, little demand coming in, right? And I just want to show you something, okay? There are other tools for supply and demand, okay, from other places, right? And they'll show you things like this, right? A chart like this, okay? And you think, hey, this is great, right? It's all short. But there are times where, okay, well, let me take off supply and demand. Sorry, take off the algo first. And you think, oh, this is it. This is the holy grail. But what do you notice about this chart? Okay, just go back here. You're thinking there's never any demand. Well, there is demand that was in here, like, because you only see the demand coming in down here. You're thinking, oh, this is perfect. I just got to get this as the holy grail. And I see this with a lot of indicators. Is there, I don't know what the term is. I don't want to say redrawing. It's more like they're erasing the demand zones that were here all on the way down. Because if you're thinking for a second, there's no demand zones coming in here. There are. You get any of these things that just like take them out after it's been traded through. The reason these are still here is because they haven't been traded through yet. They traded into, right? Traded into here, just hasn't traded through yet, right? Because this looks like, oh, this is the greatest thing since sliced bread, but there's not. There's demand zones coming in here, and here is just not being drawn out, right? And that's the important thing. That was where the algo, right? That's sort of the difference between the order flow algo and a lot of these other tools is we don't mislead you into thinking that there was no demand zones down here or here or here or here. So we still draw out these zones, right? And again, the valid ones, the ones that are confirmed, are the ones that have the blue up triangle for buy, the red down triangle for sell. And again, depending on, this is crude, this is a 1 minute chart, depending on how you're trading, right? Whether you're a scalper or a bit of a longer term trader, it's going to depend on how you approach the market in your risk management. So again, this is a 5 minute chart. And again, if you're on a 5 minute chart, this looks messy. What the fuck, Mike? Well, it's because you have the algo set, kind of low. The algo strength, because now you're on a 5 minute chart, so you want something a little bit stronger, right? 7, right? And now it's giving you some nice clean signals that are coming in, being confirmed a few moments after the high of the day has been made, right? Which is what you like to see. Okay, so let's go through here. So that was some of these zones, right? Oh, the max, supply and demand, min and max. Okay, that's an important setting because with zones, there's different intensities of zones, okay? And that's where, again, a lot of traders sort of overlook, right, when they're looking at zones, okay? Because here, you'll notice, right, this zone is quite big, or even this one is quite big. It goes from 73.93 down to 73.70. So that's a 23 tick zone, right? And sometimes the bigger the zone that you're getting, the longer it takes for the confirmation to come in, okay? As opposed to sort of the smaller zones, it's just coming in a few bars later, okay? So let's just go back to, well, whoops, go back to MES, because I know I got a lot of MES guys in here. So you can see here, right, here's a strong zone from 91 3/4 down to 20, what is that, 25 3/4. Actually on here, we have a setting, move it up here, where you could actually draw the zone height, how tall it is. Okay, but here the max and min, so you want a zone that's at least 2 price levels strong, right? Because in slow times, based off of order flow, oftentimes you're going to get not tricked, but just because of the way the market is trading, because it's a slow time, a supply or demand zone drawn off of one price level. Okay, and you probably don't want that. And for some traders, they want something where it takes in, the zone is going to be a little bit stronger, right? So, for example, if I set it at 5, it's got to be covering 5, minimum of 5 price levels, right? So you can see here earlier in the night when the market was in a tight range, right? And just let me open this up here. Go back here, because during the trading day, it's not much of an issue. But if you're trading at night, okay, notice, right? You got, if I set it to the lower level, right, 2, right? There's quite a bit of zones. There's, here, here, etc. But with the setting a little bit stronger, say 5, right? You're not getting as many, right? And I'll say this, the stronger zones, but it's zones that are taken into, that do take into account a bit more of order flow going into the supply and demand zone. And again, you could draw out here so you can see how big these zones are: 24, 25, 13, 12. And in some cases, right, in some markets like MNQ, that's a bit volatile, because the bars are so wide, you're going to have zones that are over 50 price levels, right, which is not really what you want to do, right? It's just too wide. It's just too much volatility. It's too much. If I say it's not what you want to do, is because you don't want to take in all that extra risk in setting your stops, right? Because you can see down here under draw text, the zone end is your stop price. The zone start price is where you would add on. Okay, so, if I set this at a higher number, 50 max, it's gonna, these zones that are 24, 13, they'll still show, but you might get some zones that are, quite big. This zone was 29. There's 29 ticks between here and here. So from 49.77 down to the bottom of the zone, 49.77 is the top of the zone, 69 3/4 is the bottom. You're risking 25 ticks, right? And you can see some of these zones. This one's 35, this one's 27, this one's 24. S&Ps have been rallying. So I don't know if there's any big supply zones that were there. Not really. Everything is just S&P is just a lot of demand coming in right now. But like, for example, NASDAQ, right? This is MNQ, okay? what do I got here? This is a 30-second chart. If I set this at 50, right, you can see at 25, there's only 2 signals. Again, granted, it's a 30-second chart, but if I set it to 50, there'll be more, right? That's just the nature of it. And again, you don't want to take in too much, right? Because again, that's going to affect your risk to reward ratio. Because, I see people, I see traders, for example, just really quick here, right? They'll draw a chart. Oh yeah, there's supply in here, get short. Okay, well, they're telling you to get short at 49.80, but to stop at, above the supply zone at 5,000. Really, you really want to risk 20 full points, 80 ticks? I just don't think it's worth it in that sense. Let's see. This one's nothing yet. Let's see here. M and Q. Well, what I would have to do, actually, I think, is change that. So set at 50, normal trading. I'll set it down to 1. See what it comes up. So we're seeing more signals. Some big. It doesn't look like much, but these are big zones because it's M and Q. Right. I don't have it turned on, but let's turn it on and see how big these zones are here. It's 47 ticks, 30 ticks. Again, if I'm on a 30-second chart, if I was on a minute-based chart, it'd probably look a little bit different, slightly bigger zones. But again, on a 20, if I have the zone set to 25 instead of 50, all these that are over 25, 31, 37, 47, they're not going to appear, right? 30. But again, M&Q is a unique market in that sense, where it's just a bit more volatile than the other markets. Okay, so anyway, back here to MES. Okay, so let's take a look again here at the rest of these settings. Now, the order flow analysis, you could choose to enable it or disable it. Okay, and let's just go here through the settings. Default is enabled. So when enabled, takes the order flow analysis into account, range from 1 to 5. It can't be 0, can't be over 5. 1 is the strongest. 3 is normal, which is sort of average. Setting of 5 is the most liberal. Okay, so again, 3 is average, 1 is the strongest. Now you can use settings of 2 and 4. Okay, but again, if I wanted to, I could have just made it 1, 2, 3 with 1, and 2 being average and 5. But we were sort of looking at the results, and it's just like, well, I'll just keep them in there. But let's just see what the, well, here. Well, first we'll remove it. Okay, and you can sort of see there's going to be, well, it's set pretty high, but I'll set it. I'll change this back to 25. And we'll set this back to 2. And you'll see, right, order flow analysis is disabled. Okay. You can see there's a lot of signals. Okay. When I enable it, okay, I'll start with the strongest form of order flow analysis. It's going to remove signals, right? It's going to remove some of the supply and demand zones or is not being there. Okay, so all you see is just mostly the blues going up. You see one red here. So basically from this move from the open, or this was cash open here at 8:30, early in the morning, there was some supply that came in. But really the rest of the day, there's one spot here around 11 where some supply came in. Again, around 1 in the afternoon, here and here. But then later, the supply was coming in. Honestly, you're at your high of the day, late in the day, after the market, went up from 49.30 to 50, basically here, a lot of buying, a lot of demand. Late in the day, you should just, everyone Friday afternoon is probably got a lot of supply on their books, and they're going to start offering it out up here. So I'm not surprised to get late in the day to see that supply come in later. Now, 1 is sort of the strongest, as I said. 5 is going to be the most liberal. So you're going to see a bit more signals. Now, people are going to ask, well, hey, can you tell me what goes into the order flow algo? Well, no. I'm not going to tell you exactly how it's calculated, because I do know a lot of people out there will go out and copy it. Okay, and sometimes it bothers me in the sense that you just buy the indicator. We did all the work already. So you see, it's the most liberal here at 5. So you've seen, remember, on the way up before, you just had a couple instances of supply coming into the market. But now, based on the order flow, a liberal analysis of the order flow, you're seeing a bit more supply and actually a bit more demand coming in on the way up. So again, if you're adding the order flow, you could keep it at 1 or 3. I prefer 3. That's sort of, I don't want to say it's an average, but that's the level that I think is most conducive for most markets. And I know some people like to be more strict. They want to keep it, the strongest. Again, it's up to you what you want to do. Now, again, there's some settings in here that you don't need to worry about. I already explained the zone end price in ticks and etc. So again, I like to use 3 as my supply and demand strength setting. That's the strength value. Keep the order flow analysis back at 3. Don't need to keep it so strong. Now, when we talk about pullbacks, okay, you can see here, there's some settings. Draw text. Zone end price is the stop price. Zone height just tells you how many ticks the height is. But the add-ons, right? Zone start price. So you can see here, okay, there's a zone being drawn here. 49.53. So if you're long off of this zone, where's your stop going to be? It's going to be just below 49.53. It just tells you the price, right? So you don't have to, you could move your cursor over it, but it's just easier to draw the price, write the price there. So any zone, the lower level of a blue zone is basically your stop price. On a red one, right, the top price is going to be there. Now we have what we call the add-ons, right? Because adding on to a position is something that, a winning position is something you always really want to do. Okay, so example, right, if you're long, so like down here, this zone down here at the low, okay, this blue arrow, you can see, it might be a little hard to see, but there's a blue arrow here. So it's telling you this zone is confirmed. Okay, and we're trading back in the zone. So anywhere between the high of the zone, at this point now, it's already printed 49.25, 29.5 to 29.25 That's your add-on area, right? So you just drop in another bid in there to get long anytime it tests it. Just as, let's go back here. Excuse me, right? You have a zone being drawn here, comes in here to the top of this zone. That's where you're going to add on. Just as if you were, you had a zone here, you could always get short, on a pullback, knowing that at the other end of the zone is going to be where your stop is, right? And you still need to have stops, right? You can't trade without stops. Because there's going to be times where the market keeps pulling back and it keeps pulling back, right? I mean, you can't live by the whole concept of buy the dip without realizing that the dip could keep dipping, right? Or sell the rally with the rally keep rallying. Okay, so we'll burn through these. These other settings you don't need to worry about. Things like data series, that just tells what the chart is, etc. But I just want to burn through that. I covered all these already. You can choose what color you want to draw the zones out: blue, red. Blue for buy, red for sell. Some people I know like to use green for buys. And then the plots, right? How he's going to plot the arrows, triangle up or triangle down rather. Blue for buy signals. That's the confirmation, right? That is confirmation of taking the trade, right? And this is E-minis if I was looking at bonds. Whoops. Right, that's this red triangle here. Sell, 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 sell. And this is bonds on Friday. Again, it's a 1 minute chart. Again, people use all sorts of different charts. If you're using you could use a range-based chart. You can use, I like to use range-based charts, but again, if you're using a range-based chart, I think you need to adjust your settings a bit more, because the way the chart is formed right now, it's not formed on time. It's formed based off of price movements, and that can change the way supply and demand is calculated. Okay, so you can see here, looks a little bit different color-wise. Okay, but you're still catching, obviously, the major trend down. The day before, it's just all demand all day long. Again, this is when the number came out here. Right? You get the sell signal coming at 732, but even though it looks like there's a lot of movement between here, and this is a range-based chart, this was non-farm payrolls. Right? This is after non-farm payrolls here. This is the rest of the day, where it's just been basically short all day long. And the day before was long, all day long. Again, whether you're using time-based charts, I don't even know what it's going to look like on a tick-based chart. I mean, tick-based, I don't use tick-based charts on interest rates. I don't even know where to start, but that's a 100 tick, I don't know, it's 200 tick chart. Setting, I don't know if you want to use 7, maybe you could use this. When trying to determine, based on the market you're looking at, what is the best strength value? So you start at 1, go 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, or you can just go 1, 3, 5, 7. Because again, sort of the differences between 1 and 2 or 3 are I don't say minuscule. They're small, but they're, the move from 1 to 3 is going to be a bit better. So this is, a setting of 3. You want to use a setting of 5. Okay. Maybe you want to use, a stricter order flow analysis of 1. Okay. So again, it can vary, how you want to set it up, right, for the market that you're trading. Now, there's some markets, I don't want to say there's some markets that follow supply and demand better, but because that's more of my opinion, right? I haven't been able to actually do like the hardcore analysis on it and say it follows it better, but think about it for a second, right? Markets like commodity markets, and I'm sort of, how to describe it, partial to commodity markets because that's where I spent a lot of my time in my career, right? I worked for Cargill, and when I worked for JP Morgan, and I worked for EDF Man, EDF Man is the English trading company, commodity trading company. It's been around since the 1700s. I worked at Cargill, and I was hired at JP Morgan to help set up the commodity business in Singapore. So I'm really partial to commodities in the sense that I know that, I don't say I know them better, because obviously at JP Morgan we're trading everything. But people that trade commodities sort of have to, right? They have a reason to trade the commodity, because they're probably a producer or a supplier or somebody that needs the commodity for their own purposes, right? They're making soap or something, right? And they need palm oil. You'd be surprised. If you look at the back of a bar of soap or a shampoo, there's actually, palm oil, palm olein, things like that all go into it. Cooking oil is a big thing. Things like soy meal. Okay, people say, "Wow, soy meal, what the hell, Michael?" But soy meal is a market that, it's one of those markets that people trade sort of because they have to, right? That's their business. And sometimes seeing how supply and demand works in those markets. Now, again, there's an overnight market, but the day session from when it closes at 7:45, reopens at 8:30. That's the old U.S. session, I guess you would call it. So 8:30, you can see just all supply that day. Friday, day before, a little bit different. You had some supply early, demand midday, demand again late. Again, I'm not surprised to see demand coming in at these lows. The day before, right, there's the reopen, sort of nothing. Then demand starts coming in and starts rallying like a banshee. So sometimes these commodities, copper. I mean, we talk about gold, but copper is a market that trends nicely oftentimes. Right? It doesn't look like it on this chart, but you can see supply. Every time you get these little spikes up, strong supply coming in. Supply, and there's demand. People always ask me, what about nat gas? I want to trade nat gas. I don't know why people would want to trade nat gas, but you can. Because again, it's a bit volatile. I mean, it's winter time right now, but I do sort of think there are better times to trade it. I mean, so you probably want to have a stronger strength on a market that is, a bit volatile. You can see some days are better than others, but again, nat gas is not something that everyone is going to want to trade. Well, Forex, right? Euro currency, 6E. People always ask, "Oh, what about, can I trade Forex?" Well, you could trade, this is Euro currency, right? This is the number, right? This is non-farm payrolls coming out here. And you can see the supply coming in right ahead of that. Here. Now, I'm not saying that, yeah, you could have sold it here and sold it from 109 all the way down to basically 108 later in the day. But, because I'm the type of person, numbers coming out like this, a big number, I'm just going to stand on the sidelines. But obviously late in the day, you get some nice moves. And you can see what was interesting. Where did the market stop on Friday, right? We're going to reopen soon. But where did the market stop on Friday? It stopped down here. Now, people say, well, yeah, 108 even is a big psychological number, blah, blah, blah. But this was a demand zone from the day before. Right here, right? You can even see right on the day before, here, supply. Then late in the day, we had all that volatility come in, traded back up to the previous supply zone here. Even here, got back up in there. Okay. The market's British pound. And British pound kind of similar. Right? The demand zone there, the demand zone there. Before the number came out, to give off a buy, but again, I don't advocate ever trading right ahead of a major release. Jap yen, similar thing. Kicking off your supply zones, supply up here, demand, right? Where did this market come back and basically paused before the number came out? Paused about 3 in the morning, 2 in the morning, until the number came out, then it broke through it. But this was a big demand zone from the day before, right? It came in here. It didn't stop at the low of the day, right? Because again, the most obvious supply and demand zones are going to be the previous high and the previous low. This is sort of the middle of the range, right? Came back in here. Okay. Sort of go through the slide deck really quick. There's some settings you don't need to touch, like the setup. That just basically tells you what it's looking at. Don't need to worry about those. Again, the up and down triangles, you can change the colors. These plots are more for if you're using something like markers. That's why you need the plots. It's going to automate the. So again, using the order flow algo, really the settings that you need to worry about. There's not a lot of settings, not a lot of moving parts, right? Which is important because as a trader, you don't want to be having so many things you got to adjust. Really, all I focus on, I said 4, strength value, supply and demand min, and supply and demand max. And order flow strength is really just the strength value. I tend to be consistent on my order flow strength. Either all my charts, I'll keep it at 1 or 3. I don't use 5 because if I'm using, why would I want to use the most liberal? I want to use order flow. So I'll use either 1 or 3. But the strength value, depending on the market and the chart type, I mean time-based or range-based or something, I would start at 1 and sort of go up from there. 1, 3, 5, 7. Again, you could use 2. You can't use like 1.75. It'd have to be a whole number. So like 1, 2, 3, 4, 5, 6, 7. But I just keep it simple. 1, 3, 5, 7. People, oh, those are fib numbers. But no, here. So base setting for strength value is 1. It can't be 0. You can't have 0 strength. It's just sometimes people say, well, I set it at 0 and it doesn't work. Well, yeah, because it's a setting. You need to set it at a value. I like to use 1, 2, 3, 7, and 15. You can go above 15, but I don't think that's really necessary because obviously the higher you go, the stronger it's going to be, the less signals. And if you're going to go very high, then you probably want to use a longer time frame. Change it from normal trading to a longer time frame, and then just set it to 1. Because if you're on a longer time frame, just keep the value set to 1. You're not going to use a long time frame with a strong setting. Just keep the strength setting at 1. And again, the max min. This is the thinness of the zone, or the thickness, if you will. If you're glass half full, glass half empty. And ideally, you want to have some zones with some meat on the bones, okay? And I'll just show you really quick here. I'll change this. What do I got here? I'll change it to a bond. Okay. And what do I got it set at? If I think you actually set it at 0, meaning, well, basically, well, I'll set it at 1. So you're going to get some, well, it's hard to tell on this day. Oh, let me find a slightly thinner market. Try 5s, but I have it set kind of strong here. 7, that's why. If I set it to 1, with a zone of 1, but let me just show you something. I'll set that max to 5. There's going to be, with this strength value of 1, right, which is about as low, I should probably have set the order flow strength different, but I got it at 1 anyway. But you can see in here, okay, let's close that down. You see there's some zones. This one is 1. This one is 1. This one's 1, 1. Some people might like that. I like to use a minimum of 2. But again, depending on the market that you're trading, if it's a thick, I'll say a thick market with a lot of volume, right, that tends to just go sideways oftentimes, you can get away with 1. But if you're trading a market that's a little bit more volatile, set it at 2. Okay. Let's see here, right? This is the day before. Setting at 1, this zone is 1, this zone is 1, this one is 1, This one is 1, right? Which is, it may not be the most prudent thing. You know, if you're trading something like a euro currency and it's set at 1, you can get, again, you can get quite a bit of small signals. Again, this zone is, well, this one's 2, but you can see in here, there's probably some 1s. You know, there's a 1 here. Some 1s that got drawn through here, down here. These it's not going to show because they're already traded through. But just keep that in mind, right? That deals with that. Why it's set at 2, okay? I wouldn't set it over 5 unless you're trading something like MNQ, right? Most markets keep it at around 2. Now the max, right, 25 is fine for most markets, but NQ, MNQ, even to a certain extent YM, you could adjust it to 50 just because the market's going to be a bit more volatile. And order flow strength, right? This 1 is the strongest, 2 is a little bit less strong, but stronger than average. 3 is about average. 5 is the minimum amount of order flow needed. Okay, so when using the order flow analysis, it's going to affect where the signal is drawn on the chart by a bar or 2 or 3, because again, how stronger you're using the actual order flow to confirm it is going to tell you, is going to, when it prints the up triangle or down triangle, right? If you set it stronger, it's going to need more order flow. That's why the signal, the actual up triangle or down triangle, may be drawn at different spots if you're using different order flows strengths, right? If you're using 5, it's going to be more liberal. You might get a signal earlier than if you're using 1, which is the strongest. Okay, so let's take a look at some charts. I just got some charts here. This was E-minis on Friday. Okay, this is 7, which is quite strong. You can see the order flow analysis strength is set at 3, which is sort of its the average strength there. Okay, this is where it's set at 1 strength value. So you're seeing a lot more signals. This is set at 3, fewer signals, right? And I showed you the 7 earlier. Okay, these are some charts from a few months ago, back in November. I just had them laying around, so I threw them in there. This is supply and demand. Min set at 2. This is set at 4. Okay, just to show you the difference, right? I didn't need to go pull up new charts, so you could see here, right? Set at 4, it's finding wider zones minimally, in the sense that it's got to be at least 4 ticks, as opposed to this is 2 ticks here, right? And you can see there's a zone here that's no longer there. The zone was here with 2, but at 4, it's gone. Okay, so by setting the min a little bit stronger, it's going to find zones that are a little bit more sturdy, right? Think of it like ice, right? The thicker the ice, technically the longer you can stay on it. The thinner ice, stay on thin ice, eventually it's going to break pretty soon. And I like to think of that with supply and demand. Okay, now this is set at 10. Okay, so this is 4, but set at 10, it's finding these very big, thick zones only here. Does that necessarily mean they're stronger and they're better? Well, this one worked out nicely. This one worked out nicely. Got a nice pullback in here, nice pullback here. This one it pulled back and failed. Okay, this one pulled back and failed. This one failed. You had 3 small fails here, but one really nice big winner, 30 points. This one is about, again, if you're buying on the pullback here at 80, 81, let's move up to 91. Can you, again, people always want something that's 100% accurate 100% of the time. But I want you to realize, right, there are times when you're buying a pullback, sometimes the market keeps pulling back. Right? You buy this pullback here, market keeps pulling back. You buy the dip, right? You've seen those crypto traders always say, buy the dip, and then the market keeps dipping. You buy the dip here, it's a nice winner. Buy the dip here, it's a nice winner. That's why knowing having the zones drawn out gives you a visual representation of where to place your stop. Okay, well, I know that if I get past this lower part of the blue, that's where I'm going to be out. Right, just as here, it gets stopped out, fine. It gets stopped out up here, fine. It gets stopped out here, because I know I could catch a move like this. So this is the order flow analysis set at 3. This is when it's not turned on. This is disabled at this point. So you see most signals are going to show when you're not using the order flow analysis. Right? That's, again, that's with the order flow analysis on. That's with it off. Okay, this is set at 1. It's a bit stronger. 3, or sorry, this is 5, the most liberal. Okay. So basically, that's the order flows algo in a nutshell. Again, this was really to introduce you to it, to get you familiar with it. We've got a big user group, and again, we're sort of in the process of setting some further stuff up for the users of the software. Friday, this coming Friday, for users of the software, we got a special special training, I guess that's the word you'd call it, to sort of get more out of, you know, out of how they're using the order flows algo, because there's a lot of ways. There's certain things that I don't want to get into now because it's more advanced. Think of it as this Friday is a more advanced session for traders. So again, if you're interested in the order flows algo, it's that's the website, orderflowsalgo.com. I'll just pull it in here really quick on a browser, just show you what it looks like here. www.orderflowsalgo.com. Right? Just this. I'm going to put it in the chat there. I'm going to get to some questions shortly, guys. I'll put it in the chat so you can still watch this little welcome video, and you can see it explains how the zones are, you know, the formation. Again, I don't want to get into sort of the mechanics of it because that's not the whole point of this presentation, because I know I will get questions. So how is it actually calculated? Right? And yeah, I'll be honest, some people mean well when they ask that. They do want to know, but I've been burned by people saying, oh, how is this calculated? Then later, the person is selling something like that, very similar with a slightly different name. They'll add a different name to it. But again, you know, people that have been using this are very happy with it. So, you know, you just scroll down there. You could use PayPal. You could use Stripe. You know, however you want. But that's the link right here. Order flows algo. I'm gonna burn through some questions here, real quick. I don't want to keep you guys on. It's Sunday night, and the market's just reopened. If I have this indicator, James asks, if I have this indicator buy sell, if I have the initiative buy sell indicator and passive buy sell, would this indicator help? Yeah, that is an interesting question, James. That's a legitimate question, but honestly, when I look at indicators, I'm not what's the word? I'm not the type of person that goes and loads up all sorts of indicators, because Lord knows my programmers created for me a lot of indicators. I have a lot of different ways of analyzing the order flow, right? Like, for example, right, I got the trade encyclopedia, right? There's like 130 trade setups in there. And I do get questions from people, oh my God, I got to memorize 130 trade setups. No, you don't. You got to find the ones that work for you. And again, you know, I've developed a lot of tools that look at very specific things in the order flow. And sometimes I thought, well, I'm just going to load everything up on my chart and see what works. And it's not as simple as that, and just leave it at that, because there's so much things that either work together or work against, in a sense, in order flow. And I actually have some of my indicators combine certain things of different aspects of order flow to put it together, for example, like the combo. But generally speaking, what I tend to focus on is certain aspects of order flow at a time, rather than trying to do it. Now, that's not to say that it's not going to work. I mean, by all means, you could test it out and try it. but it's, in my opinion, it may, just based off my own experience with other tools, trying to see what works with what works, with what doesn't work, is sometimes it's like 50-50. Sometimes it works, sometimes it doesn't, right? Just because it's, you're trying to take in sort of different aspects of order flow all at the same time when market conditions aren't necessarily suited for it. No, you can't use, and Constantine asked about the Sierra charts. No, you can't use it on Sierra charts. Unfortunately, I had a falling out with the guy. Well, not a falling out. I ghosted a guy I shared a lot of information with and tools, and we had a nice partnership going. And then one day, it just got ended. Let me see here. So, does the zone box initiate only when the arrow? Yes. So the zone box only initiate. Sorry, let me go back to the chart here. Okay, so you can see, right, there's signals here. Let me make this bigger. It's a ninja, right? If you got these on volatile days, get these big bars. So for example, here, right, the actual zone may be drawn out if there's no confirmation. That can happen, right? Like here, the zone is being drawn out, no confirmation, there's no up triangle. The ones that have the actual triangle are zones that are confirmed, okay? So there may be instances where you have zones being drawn out, but no confirmation. I know some traders that will still trade those. Me, I like to have that order flow confirmation. And why would it do that? Well, it was just maybe just taking too much time for the order flow to confirm it, but we decided to still keep it on there because it did meet the conditions of supply and demand. But really, the algo is supply and demand coupled with order flow, right? It needs that order flow. So that's where the triangle is going to come in. But the triangle should come in right around the time that the zone is drawn, okay? Because once it's, for it to be confirmed, right, it's already doing the calculations for the zone that is telling you it's there. Now it's taking into account the order flow to confirm it. Okay, and if it takes too long for the order flow to confirm it, you're still going to have that zone being drawn out like this one here. Okay, there's no up arrow over here, just like this one. But it doesn't mean that just because the order flow didn't confirm it, it's not support or supply or demand. It just doesn't have the order flow to confirm it. Okay, and again, does that make it stronger or weaker? Well, me being an order flow guy, I like to have the order flow confirm it. That's just me. Is there an option to get higher time frames into lower time frame? Yeah, you can. I mean, so for example, right, say you want to do this, follow minute-based chart. So this is a 1 minute chart. And okay, let me just set that back to normal. Set this back at 25. I don't know, what market are we looking at here? Euro currency. And so we're looking at a 1 minute time frame, but you want to look at a higher time frame. Okay, so follow minute-based chart. So I'm on a 1 minute chart, and you want to look at a 60-minute signal on the 1 minute chart. That's just calculating here. I got the data series turned on. This one, it's turned off. So it's a 1 minute chart. Why is that? Oh, strength value 3. Again, I should keep that there. 2. Offsetting text. Am I on there? A second base chart. Seems like a bit more signals than I'd like. Okay. Again, Friday was a bit hectic. So you can see here, right? These are 60-minute signals on the 1 minute chart. Or what I would just suggest, like, just use the longer time frame. It should be, in my opinion, that's better. Here, you can't even see it because such a long time frame. You had one short there, long here. But again, it depends on how you're going to look at the market, but it's possible. Let me open this up here. Okay, Ewan, take a look. I didn't see your email. You know, recently, problem with Google and Yahoo is the other day, it was sort of this email apocalypse thing where they really made this big effort to filter out spam emails and promotional emails, and it's affected everybody. So I'll check because I think maybe your email actually ended up in my spam folder, because once they send one email there from a person, all the rest will go there. Because I know, like, even my programmer who I've been emailing like every week for the last 10 years, they say my email all of a sudden starting to show up in spam. But I'll take a look there for your license, Ewan. If you load more days, Christian asks, if you load more days, Algo will pick up historic zones that haven't been traded through. So what's the optimal number of days that you would suggest to have the algo analyze? Well, that's a good question, because you know what? When people talk about supply and demand, okay, technically the levels should hold for a long time, right, until they get traded back into. So, for example, okay, let's set this. This is this euro currency. I'll just sort of set it at normal. So, like here, okay, I've got it set at how many days? Not that many. 5. I mean, if I were to go, say, 20 days, okay, you know, there might be some big, like here, right? There's a big overhead zone coming in there, you know, from, that was when? Last month, right? The 29th, okay? So again, I mean, you can draw this, so you can see like these zones from way before, overhead zones, right? That go back quite a bit of time, even, you know, beginning of this chart, right, from the 17th, supply zones that haven't been touched. Now, it's again, this is a 1 minute chart, okay? So it's not like it's an hourly chart. So you're looking at hourly zones from a long time ago. For me personally, just my own opinion on that, I like to trade in the now, not necessarily have levels. And again, you know, I'm based off order flow. The order flow that's taking place now is based off of what's happening now. And even though this is a level that was formed, it's quite old in the sense, you know, for example, these areas here from the 17th, so about 2 weeks ago, okay? And that doesn't mean they're not legitimate zones, but what sort of formed those zones at that time off of the order flow or from whatever, you sell off, you know, these are zones what is that, 109, 80 more or less. We're almost 200 points lower. What's going to happen now going forward, right? If the order flow all of a sudden starts changing, becomes very bullish, even though I have these zones up in here from 2 weeks ago, or by the time we get up there, it could be 3 weeks. It's one thing to know that they're there, but I don't necessarily, for me, if this market starts getting a lot of demand, I'll put more belief in that demand that we have currently than that supply that happened 3 weeks ago. Okay, it's one thing to know and respect that you have levels up here. Okay, you can't not I don't say dismiss it, because it was formed for a reason. But I'm going off of the most recent activity in the market, right? The order flow. And so if I see a lot of demand and it's coming up to these levels, especially if it's taken out supply levels all in between, you know, from here all the way up to here, I'm not too worried about what's happened up here 3 weeks ago, because you know, I'd be looking for the market to take those out as well, honestly, if the demand starts coming in and it's strong. Okay, that's just my own. After how many bars the zone is drawn? Well, it's not a fixed set. It depends on how the order flow is coming in. Rob asks, is this different than the vault package? Yeah, it reads completely different things in the order flow. All my, you know, I've developed, just give you an idea, right? They got the trade encyclopedia, 130 trade setups. I've got about 30 indicators, right? Which basically, there's so many different ways. That just gives you an idea how robust order flow is, right? There's a lot of different aspects of order flow. Order flow is just not the buying and selling in the market. It's the aggressiveness, right? It's where value, where volume comes in, how it's traded. Is it traded passive? And so every indicator that I release reads different aspects of the order flow. This is different, reads different parts of the order flow, but it does, not only does it read the order flow, but it also does, you know, the technical analysis of determining supply and demand as well. Okay. Chris asks, how do you use this algo as a standalone tool? Do you use, you know, he says, hey Mike, do you use the algo as a standalone tool or in conjunction with the footprint to confirm? I use it predominantly as a standalone tool. I will watch it. I have screens open up. I got multiple screens, but I've got charts opened up. You know, bar charts opened up on my other screens. And if I see something happening on the algo, like a zone being drawn on and it's confirmed, I'll look at the order flow as well, right? But I know that if I'm looking here, right, like for example, here, okay, I see this is the reopen here, right, 5 o'clock. Just reopened recently. I see overhead zone. See a small bullish zone here, okay. But I know we just run right through it. So I'm seeing some supply coming in early on Sunday night, which to me is bearish. And I'll watch, you know, take a look at the order flow. I use it in conjunction with order flow, basically. Aaron asks, this is an interesting question. How would you know which supply and demand zones would give you a higher probability of success? In other words, how would you know zones are stronger than others? Well, one, I hate to use the intensity, the sort of the how strong a zone is, right? Like the bigger the zone, because obviously the bigger the zone, the more, I don't want to say the more chance it's got to hold, but generally speaking, right? It's like, I see guys do this a lot. They'll say, oh, look at this. You got a big, they'll do this, right? This is Friday. It's hard to see this bar because this was on the, let me just open up this chart really quick here. Where are we here? Here, right? So here's the bar, okay? Make it a little bit bigger. Okay. Actually, it's up here. Fair value gap. Well, geez, yeah. And they'll be like, look, and it's holding. Well, no shit, it's holding. It's from 108.60 to 109.02. 50, you know, what's that? 40, 50, you know, 42 ticks. The rest of the day, you probably just trade 40 ticks. I mean, so I don't know, you know, I tend to keep the zones in between 2 and 25 levels. So if it's, you know, on the upper end of 20, you know, in the 20s, I like to think it's a little bit stronger. That doesn't necessarily mean it has to hold. But really what I sort of, one of the pet things that I like when I'm looking at zones is sort of their proximity to each other. So if I see like a couple of zones coming in, either one right after the other or two, you have a zone, then you have another zone with not a lot of space in between, right? I like that because what's that market is telling me that you had some supply come in, market sold off, market came back up to your supply zone, then you got more supply coming in. So to me, that those are sort of the zones that I like overall. So you could either come in, sometimes you're going to see them. Let's see here, let's go back to normal day here. Let me just get this chart back to normal. So for example, this was Thursday, Wednesday, right? There's a zone here, you got another zone, close proximity, in this case from 44.5 up to, sorry, 84.5 up to 86, right? Or the ones, I don't know if I'm going to get any on this sort of chart where they're overlapping like this. I like to think those are stronger. That's just me. But again, this is a 1 minute chart. I like to use smaller time-based charts. Actually, get down to like 30 seconds even on a lot of markets. But there's different ways you could use it. But that's some of the things I'll be talking about on Friday's session. Sort of the things that I use to get the most off of it. Carter, hang on, Carter. Let me see your note here. I'm just writing this down. Your email address. I'll get you those download links and get them out for you. Joseph asks, what is the difference between the algo and the 3 volt indicators? Okay, I think I pretty much covered that. I said, you know, the algo, right, is traditional supply and demand analysis coupled with order flow. The vault indicators deal with actual order flow. And yes, it deals, it's only available, Michael, on NT8. It's not available on the other platforms yet. NT8 is the platform that I use. It's stable. You know, it's the fine platform. I know, you know, some people are partial to Sierra Chart, some are partial to other platforms, Motive Wave, etc. But me, my programmer, we use NinjaTrader. All right, guys, it's coming up on 5:30. I don't want to keep you guys on too long. So I hope you guys are able to get some good information, get a good overview of what the Orderflows Algo is. Again, if you're interested in it, just go to orderflowsalgo.com. Or not Orderflow Algo, it's orderflowsalgo.com. All right, guys, so I'll let you go and have a great rest of your night. It's Sunday night and no football this weekend. Well, there's the Pro Bowl. We call that football. I think that's over already. You know, those of you that do get it up, I'll see you guys on Friday. For those of you that have our regular order flows software, I'll talk to you guys on Wednesday. And Ewan and Carter, I'll get your questions addressed privately over email. Thanks, everyone. Have a great evening, and I'll catch you guys later. Bye-bye.